Well, that is up YouTube. Welcome back to Stocks by the Numbers, and I wanted to take another quick look at another material company here, SCCO, Southern Copper Corporation. And right now this stock is trading a touch below $47 a share, up a little less than 2%. Opened up on the day, came down to about 45 and a quarter here, as we can see here, 45.28, and then it kind of bounced and turned upwards. And this company right now, market cap $36 billion. We got a beta of a little over 1, so it's a little more volatile than the rest of the market. We got a pretty low PE with a kind of healthy EPS, and of course the dividend is now paying a healthily 10% yield because the stock price has pulled back since. But here, I wanted to extrapolate a 5-year chart here, and if we look out, see, this is the pandemic right here, March 2020. And we had a run up, obviously, with all these metals, if you guys remember, and then it pulled back. And look at the number. Look at the number on the right side. It's showing me 45.27. And then look where we hit today on the low, 45.28. And then we bounced and started to make that U-turn. So I think we might see a little bit of a recovery here, going back up into the 50s and potentially even $60 a share. But this company does have earnings coming up, and that may potentially make or break where the stock is going to trade right now. So again, this is a 5-year chart, and you're seeing some growth over the years, especially with pandemic. But you switch back over here, and it looks like right here, at like around this like $47 range, maybe between like 46.5, 47, you can see that it came up here in this circle. It came up, bounced around, and then when it broke that resistance, it was off to the races. And even if you go back, this is a 5-year chart again, by the way, and even if you go back here, look, we're rising, we hit that level, we go up, we retest the support, and then we bounce and break out from 46, 47, and it hit almost $60. And then we sold off, broke that resistance, retested, and then rebroke and came down and pulled all the way down to $28, $29 a share. And you see the same thing here. As we rose up during the pandemic, it got to that it got to that like $46, $47 level. It broke up slightly, dropped back below, retested the level, and then broke up and hit $83 a share. This I just circled up here because this was like a double top that started to sell off. And now everyone's beating them up because of their profit margins and whatnot. And if we come down here again, 36 billion market cap, this is showing a 9% yield. It really doesn't matter. But here is what I wanted to show you guys. Just slow decreases. Not big decreases, but just slight decreases on this EPS side. So because profit margins are slowly decreasing, the price of the stock has been taking a hit and has been selling off. And if we look here, this is quarter over quarter. You can see a little choppy. However, they're kind of maintaining like that 2.7, 2.8 billion in revenue. However, the income, look at the income here, right? It jumps up to over 900 million, their net income. Profit margin 32%. And you can see, look, 867 million, 833 million, 784 million. So the income itself is slowly decreasing with obviously the profit margins going along with it. However, annually, it does look pretty healthy. And with revenue here of a touch below 11 billion, they might meet or potentially they might meet or potentially exceed that 10.9 billion, based on how the rest of the year plays out. But, long term, like you can't knock this slow, steady growth right here. And that's what we always talk about when we look for these investments, not trades, investments. And you can see, the profit margin has been increasing year over year. Net income made a big jump back in 2021. And now again, because they're dealing with hyperinflation and increased cost of diesel fuel and everything like that, it's been slowly beating up the stock. However, I do like the company, right? I do like the company because remember, this was the pandemic era, where it raged from 23, 24 up to $83 a share. And this is what makes me laugh, because it's like they'll play one narrative here, right? Oh, there was a copper shortage and aluminum shortage. That's why those stocks went higher, and gold and silver were rising during this period because of hyperinflation and because we printed trillions of dollars, right? But now we fast forward, like 12, 18 months later, and all of a sudden they try to shift the narrative, right? This is why I laugh when we talk about trading versus investing, right? If I brought this to your attention here around this time, you could say, yeah, it looks like a double top. In the short term, it's going to pull back. I would be a short seller. I would grab some puts here. I'm not stepping in here up at the, the high 70s, the $80 level. Yeah, totally understandable. However, this rise, I think, is what really tells you what's going to happen with these metals, because even gold and silver has pulled back, right? And if you talk to any economist, any analyst during pandemic, when gold and silver was raging, what did they say? Right? Oh yeah, no, it's totally justified. They're we're printing money like crazy. We're devaluing the dollar, so gold and silver is worth more than it was. Okay, that makes logical sense. All of the prices of all these metals and the shortages, like I said, on aluminum, on copper, that's driving share prices up. Okay, that makes sense. But now again, you expect us to believe all of a sudden that's not the narrative anymore, and now all their profits, everyone's profits are getting eaten up, and now you should stay away from these companies, and that's when my radar goes off, right? Because regardless of what you show me on a chart, like, you can't tell me that the value of gold and silver has decreased since its highs of right after the pandemic. Right? If you look at some of this economic data, right, like we just had, what was it? I think it was the CPI. I can't even remember right now. But I know that, people are talking about 9.1% inflation, and other people are saying, well, the real inflation is more like 10.5. These are not small numbers. These are not small numbers. And if we're dealing with hyperinflation and we double or triple our money supply, that devalues the dollar. And regardless of what these people want to tell me about the prices of these metals, like we should know that they're worth more than they were several years ago, right? That's the reason why they really ripped in 2020. So, I'm talking about gold and silver. I'll probably do maybe a video or two talking about GLD and SLV, the gold and silver ETFs. But this is something that was on my watch list. I made decent profits here during this bounce. Once I saw it break these levels and just continually rise into the 50s and 60s, I remember buying some speculative 80s, and then the son of a gun actually popped and hit $82, $83 a share, and I ended up making, I think it was over 1,000% return or something like that on the naked calls. But still, I just wanted to show you guys this 5-year chart, because I feel like right now we're at a pretty important level, and this is going to dictate whether it's really going to break down and they're going to beat it back up down into the 30s, or if it's going to bounce from here and it's really going to explode back into the 60s and the 70s. So a couple of points here to keep an eye on right here at this level where we are. And again, switching back here, this 45.27 mark, where it bounced higher, and then we had 45.28 today, right here, right after the open, 20 minutes after the open, and then boom, we bounced off that and started to go higher. So, it could get rocky over here at these levels, as I show. It bounced around here and then went higher. It bounced around the level and then went lower. It bounced around the level and then went higher. So, right here, the next couple of days are really going to dictate where this stock is going to go. But I just wanted to bring it to your attention, a little diversification, something else for you guys to keep an eye on. And, with earnings coming up here, this could be a good play for a lot of you traders out there. We're in this little channel here, trending downward. We have earnings coming up July 26th. And, we got like 3 slight misses, even though beat on the revenue here, beat on the revenue here. We're seeing slight misses on the EPS side. And, more recently, they're beating the stock up. Here it kind of stayed sideways and slowly climbed up. And, since then, they've been beating it up a little bit, going from, $78 all the way down here to sub 50. So these earnings, I think, are going to tell a lot, because if EPS comes in light again, I think that they are going to beat up this stock and bring it down to sub 40 and keep it in this downward channel. However, if they do come in with a surprise, estimate here on the revenue, $2.62 billion, I actually think that's kind of low, because they've been posting like 2.7, 2.8 if you go back over a couple of these quarters. So I think they could potentially beat here on the revenue side. However, if you look, EPS side has been slightly missing for the last couple of quarters. So that, in my opinion, is really what these analysts and these traders are going to be looking for. They're going to be looking for that EPS number, and I think it's going to trump the revenue number regardless of what they post. So again, this is Stocks by the Numbers. I just wanted to keep you updated with something a little bit different. And, let me know in the comments section below. I'm sure some people know this company and feel it should be back up at $80. And I'm sure some people have been betting against this company recently, making a killing. And, they might tell me, you're a little early. This is kind of like a stick in the mud. This might keep dropping down sub 40 and go back into 30s. And then we could potentially step in and buy. And listen, again, like I always say, I welcome all viewpoints, because you're never in this by yourself. We're all in this together. We're all trying to do the same thing. We all have the same goal. And at the end of the day, if we can get a dialogue going about a company like SCCO that's flying underneath the radar, everyone that can get involved can do well, and we can help out everybody. Just like around here at this level, I didn't have the channel going at the time when I was putting in some of these trades, but like right here, if I had the YouTube channel, I would have brought up this chart and mentioned the shortages in the metals, and that all of these companies were going to go higher, and I would have mentioned my positions in companies like Alcoa and SCCO and LPX, and all of us together could have jumped on board, and we all could have made money in the material sector. So, this is why I make these videos, trying to build a community, trying to get a dialogue going. And, again, we can help each other out, because at the end of the day, we all have the same goal. So, once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you like the video, give it a thumbs up. Again, it's like everyone on YouTube says, really helps out the algorithm, increase a little bit of traffic coming into the channel, so a couple of more people can see the videos, see the content I'm putting out. If you like the videos I'm putting out, hit the subscribe button, hit that little notification, little bell thing, lets you know every time I put out a video, blah, blah, blah. But again, I know markets have been choppy, so moving forward, I wish everyone success. I hope everyone makes a couple of dollars. And thanks for stopping by.